Welcome to the stock analysis of Agarwal Industrial Corporation Ltd. Today, we're diving deep into this leading player in the Indian petrochemicals industry. We'll cover their business segments, financials, management outlook, and key strengths and weaknesses. Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of Agarwal Industrial Corporation. Established in 1995 as Bombay Baroda Roadways India Limited, AICL is now a leading Indian manufacturer and transporter of bitumen products, crucial for road construction and industrial applications. With facilities across India, AICL also provides LPG transportation and has expanded into shipping through its UAE subsidiary. Headquartered in Mumbai and promoted by the Agarwal family, AICL continues to grow, driven by strategic expansions including the one in which the company doubled its vessel volume in a year. Let's break down their business segments. First, bitumen and allied products. AICL manufactures and trades bitumen, vital for infrastructure, especially road construction. The company has facilities in Taloja, Belgaum, Baroda, Hyderabad, Kochi, Pachpadra, and Guwahati. Second, logistics for bitumen and LPG. AICL leads in bitumen logistics with specialized tankers and storage facilities across major cities. It also ranks among India's largest LPG transporters. Third, power generation. AICL has ventured into renewable energy, operating windmills in Maharashtra and Rajasthan to ensure a sustainable energy future. Let's now break down Agarwal Industrial Corporation Limited's revenue segments for FY24. The ancillary infrastructure segment is the largest contributor, making up 80.64% of the total revenue. Petroleum vessels operating and chartering account for 11.77%. Petroleum products contribute 3.44%. Logistics services make up 3.63%. Windmill operations, focused on renewable energy, add 0.06% to the revenue. Lastly, other income contributes 0.46%. Now, let's look at the management of Agarwal Industrial Corporation. Jayaprakash Agarwal, the managing director, has been a pivotal force behind AICL's transformation from a single logistics company to a diversified enterprise. With over 42 years of business experience, his strategic leadership has been critical in steering the company's ventures in bitumen trading, manufacturing, and wind power projects. Ramchandra Agrawal, a whole-time director, also brings over 42 years of experience to the table. His efforts have significantly expanded AICL's logistics division. He is known for his focus on human resources. Lalit Agrawal, another whole-time director, has over 33 years of experience in the industrial and service sectors, particularly in the bituminous industry. His strategic vision led to the incorporation of an overseas subsidiary and the consolidation of the group company. Mahendra Agrawal, a non-executive director, is known for his expertise in management, finance, and operations. Let's now look at the shareholding pattern of Agarwal Industrial Corporation Ltd as of June 2024. Promoters hold the majority share with 57.20%. Foreign institutional investors hold 5.97%. Other institutions collectively hold 0.48%. Public shareholders own 36.34% of the company. Now, let's delve into Agarwal Industrial Corporation Limited's cost structure as a percentage of net sales for FY24. The cost of materials consumed accounts for 19.44% of net sales. Purchases of stock in trade represent 60.69% of net sales. Manufacturing, operating and other direct expenses comprise 10.65% of net sales. Employee benefit expenses make up 0.46% of net sales. At last, other expenses accounts for 1.37% of net sales. Let's now review Agarwal Industrial Corporation Limited's financial performance over the years. Net sales have shown robust growth, increasing from 222.15 crore rupees in FY15 to 2125.30 crore rupees in FY24, reflecting a CAGR of 25.34%. Profit after tax has also demonstrated significant growth, rising from 5.88 crore rupees in FY15 to 109.21 crore rupees in FY24, with a CAGR of 33.93%. Return on equity has increased from 13.61% in FY15 to 21.37% in FY24, highlighting the company's improved efficiency. Let's now turn to the management commentaries to get a better understanding of the company's performance. The company achieved its highest ever volume in FY24, growing 15.8% year-on-year to 4.91 lakh metric tons, and aims for 20% year-on-year growth to 6 lakh metric tons in FY25. EBITDA per ton for FY24 was 3,625 rupees, with a target of 3,800 rupees to 3,900 rupees for FY25, driven by profitability efforts. A new vessel with a 40,000 to 44,000 tons capacity was added in Q3 FY24 but was not utilized due to ongoing work. Minimal monsoon demand leads the company to lend vessels to third parties to maintain revenue. Company vessels accounted for 60% of total bitumen transport, with plans to increase this to 65% to 70% in FY25. Now, let's talk about the company's capex. The company will maintain a 150 crore rupees annual capex, assuming stable ROCE and potential opportunities, as in the past 3 to 4 years. Management prefers debt over equity for funding capex and asset acquisition, with openness to adding vessels through debt. The company is enhancing infrastructure and logistics to increase volume, seeing potential in the current market. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Established market position. AICL benefits from over 4 decades of promoter experience, strategic manufacturing, and storage locations, leading to reduced transportation costs and a 33% CAGR in the past 3 years. Diversified revenue profile. AICL offers complete transportation solutions, including LPG cylinder transport, power generation via windmills, and ship chartering. Ship chartering revenue moderates freight costs by 60% to 70% and balances lower margins in bitumen trade, supported by a strong client and supply network. Now, weaknesses. Margin volatility. Operating margins are vulnerable to fluctuations in bitumen prices and forex rates, with past volatility between 6% to 9% due to delays in passing on cost changes. Cyclicality exposure. AICL serves cyclical industries like power and infrastructure, making it susceptible to economic downturns, which can affect cash flows in stretched debtor periods, especially among small consumers. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.